Today we are walking a very, very fine line, the one that separates smart tax planning from a federal crime. One is completely legal, used by millions of people. The other can literally land you in prison. And figuring out that difference, well, that's crucial for pretty much everyone, from you and me to the biggest corporations on the planet.
So let's just cut right to it with a really direct question. When you look at your own finances, are your strategies the work of a savvy planner? Or are you maybe, accidentally or not, crossing that line into illegal territory? The answer isn't always as simple as it sounds, but by the end of this, you'll know exactly where that line is drawn.
All right, let's not bury the lead. The fundamental difference is actually pretty simple. Tax avoidance is 100% legal. It's all about strategically using the tax code, the rules of the game, exactly as they're written. Tax evasion, on the other hand, is flat out illegal. We're talking deception, hiding things, and intentionally breaking the law. One is playing the game smart, the other is just cheating.
So here's our game plan. We're going to start with the legal stuff, the tax avoidance playbook. Then we'll pinpoint that exact moment when smart planning turns into criminal evasion. We'll even deep dive into specific strategies for regular people and big corporations, ask why the whole system is so darn complicated in the first place, and then wrap it all up with the key things you really need to take away from this.
Okay, let's open up that tax avoidance playbook. Now, you've got to get this straight. This is not about finding some shady, secret loophole. Tax avoidance is actually the intended way the tax code is supposed to work. Lawmakers literally create these tools to encourage us to do certain things, and when we use them, we're just playing by their rules.
So here's the formal definition. Tax avoidance is just the legal practice of using all those provisions baked right into the tax code to, well, minimize what you owe. Think about it this way. The government wants to influence our behavior, right? They want us to save for retirement or go to college or invest in green energy. So they use the tax code to give us a little nudge. Tax avoidance is simply us responding to those nudges exactly as they hoped we would.
And the two biggest tools in this playbook are tax credits and deductions. And believe me, they are not the same thing. A tax deduction is good. It lowers your taxable income. So if you're in the 22% tax bracket, a $1,000 deduction saves you $220. But a tax credit? Wow, a credit is way more powerful. It's a dollar-for-dollar reduction of the final tax you owe. A $1,000 tax credit saves you a full $1,000. Understanding this one difference is really the foundation of smart tax planning.
All right, now we're going to step over that line. We're leaving the world of legal strategy and entering the world of criminal activity. Tax evasion. This is where your intent changes from using the law to deliberately and illegally breaking it.
There's really no gray area here. Tax evasion is the illegal and deliberate failure to pay what you owe. This isn't about you interpreting a confusing rule in your favor. This is about straight-up deception, like a server who doesn't report all their cash tips, or a freelancer who intentionally lowballs their earnings, or someone who claims a kid as a dependent when they don't even have one. It's all about lying about the facts to the IRS. And let's be absolutely crystal clear about the stakes. The IRS does not mess around with this. Tax evasion is considered a serious offense, and it is punishable by huge fines, major penalties, and yes, even jail time. So this line we're drawing today isn't just academic. It has some very real and very severe consequences.
Okay, so we've firmly established that line in the sand, legal versus illegal. Now let's get practical and do a little deep dive into how legal tax avoidance actually works. We're going to look at some of the most common strategies out there for both regular individuals and massive corporations.
For most of us, the number one, most common bread-and-butter avoidance strategy is the standard deduction. It's basically a built-in tax shelter that millions and millions of people use every single year.
And if you think this is some kind of niche strategy, think again. The numbers are staggering. In 2020, more than 87% of all taxpayers took the standard deduction. This isn't a fringe benefit. For most Americans, it's the default, a simple built-in way to shield a big chunk of your income from taxes.
So here's what that looks like for 2024. If you're a single filer, you can just automatically deduct $14,600 from your income. If you're married and filing jointly, that number doubles to $29,200. So every taxpayer gets this choice. You can take this simple standard amount, or you can itemize, which means adding up a bunch of specific expenses like mortgage interest or what you gave to charity. You just pick whichever number's bigger. And for almost 9 out of 10 people, the standard deduction is the better deal.
All right, next up, another huge tool for individuals, saving for retirement. You might not think of it this way, but every single dollar you put into a 401k or an IRA is a government-approved and even encouraged act of tax avoidance.
You've basically got two main flavors here, and they're kind of mirror images of each other. Look at the traditional account. You put in pre-tax money, which means you get a tax break right now. The money grows tax-deferred, and then you pay taxes way down the road when you take it out. Now look at the Roth account. You put in after-tax money, so you don't get a break today. But, and this is the magic part, your withdrawals in retirement are completely tax-free. So you're just choosing when you want your tax break, now or later.
Okay, let's shift gears completely and look at the strategies used at the very top end of the financial world by corporations and really high net worth individuals. One of the most talked about methods is offshoring profits. And while it can feel, well, pretty controversial, under the current U.S. tax code, it is a legal form of tax avoidance.
So how in the world does this work? Well, a big multinational company might set up a smaller office, a subsidiary, in a country with super low taxes, like Ireland or the Cayman Islands. Then they can legally move their valuable assets, like a brand name or a patent, to that subsidiary. A huge portion of the company's global profits can then be funneled to that office as royalty payments, where it gets taxed at a much, much lower rate, or maybe not at all. It's complex, but under current law, it's perfectly legal.
So this brings us to a really important question. If we have all these perfectly legal tools for tax avoidance, why on earth is our tax system so notoriously, mind-numbingly complex? It turns out the very existence of all these provisions has some pretty significant unintended consequences.
And this complexity, it has real-world costs. For individuals, it means people are constantly missing out on tax breaks they're actually entitled to just because they don't know they exist. It also means we collectively waste billions of hours and dollars every year just on preparing our taxes. And for businesses, all this uncertainty makes it way harder to plan for things like hiring people or investing in growth. When the rules are this complicated, it basically acts like a brake on the whole economy.
Okay, so we've covered the definitions, the strategies, the big picture problems. What's the bottom line here? Let's boil all of this down into a clear, simple set of actionable takeaways that any savvy planner can use.
Here it is, a simple three-step framework. Number one, and this is the most important, know the line. You have to burn that distinction into your brain. Legal avoidance is using the law. Illegal evasion is breaking it. Number two, use the code. The tax code is packed with legal tools like the standard deduction, retirement accounts, and all kinds of credits. They were put there for you to use, so use them. And number three, seek counsel. The tax code is complicated. If you are ever in doubt about a strategy, the smartest thing you can possibly do is talk to a qualified tax pro. They'll help you plan smart while making sure you always stay on the right side of that line.
And that brings us right back to where we started. The line between legal avoidance and illegal evasion is on paper crystal clear. The real challenge is navigating it in the real world. Now that you know the difference, the question is simple. On which side are your strategies?